So just how likely is $100 oil? Well, joining us now is Fatih Birol, Executive Director at the IEA. Still with us is Erik Nielsen from UniCredit. So thank you for sticking around, Erik, and welcome to the program, Mr. Birol. Last month, you were warning that actually the oil market was getting tighter. Where is it now?
It is very tight now, and I think what we have been saying since March, that we will be tightening of the oil markets towards the end of the year, is unfortunate, I should say, materializing. And this is not a good news for the global economy. In fact, not only the oil, but also coal and natural gas prices also going up. And I can tell you that it looks like expensive energy is back. Expensive energy is back at a bad time again, when the global economy loses momentum. Yep. Currency crisis in major emerging countries and trade disputes among the major economies. So high oil prices is not a good news for the global economy, both for importers, yeah, consumers, but I believe also for the exporters. If not today, maybe tomorrow. Okay, but so you think it's tighter than a month ago, if I'm correct? Definitely so, because of the demand is still very strong. Yeah. And we have been losing oil from Venezuela in big amounts, and also Iran is going down. This is crucial. When does it start hurting demand? Is it in the fourth quarter? We are going to soon, in a few days, releasing our monthly oil market report. And if not in this report, I'm sure in the next year's report, my colleagues may well give a second look that it's going to hurt the demand. We will see slower demand growth because India, for example, one of the major drivers of global oil demand growth, their economy is hurt badly. Yeah, but so you're not seeing signs of a slowing demand yet. Where do you think you'll see it first? I think emerging countries, and I will put, for example, India, China, Asian countries. India current account deficit is badly hurt here. The fiscal deficit of India is doubled. And in fact, leave aside these numbers, the current Indian domestic prices are equal to $100 in terms of the rupees. So it is because they lose a lot of value. Are you satisfied in how Saudi Arabia and its allies are responding to this? Should they be putting more oil on the market to make up for the lost production? We are losing production from Venezuela, big time, and Iranian exports are going down, and the demand is still strong. And we really need more oil. What Saudi Arabia did is an excellent move, coming from about 10.7 million barrels per day, but we need more oil to come to markets, to comfort the markets, especially in the fourth quarter this year. I want to bring in Erik in a second, but why are they not putting more oil in? Does Saudi Arabia not have enough? You know, there's always a time lag. It's not like you switch it on and suddenly you're producing more. I have all the confidence that Saudi Arabia and other big producers in Gulf and other parts of the world see this situation. It's a very sensitive situation. Fourth quarter is very critical, and they will make everything they can do in order to increase the production. Otherwise, it's a bad news for the consumers, but also bad news for them. But is it a problem of timeline, that even if they want to do it, they won't be able to do it until the first quarter of next year? There is still 10.7 they are producing now. I think there is still some room to go to 11 and around that levels, yeah. Erik, as chief economist, do you see $100 oil, and actually what would the impact on that be, again, on demand, on emerging markets, and just dollar? We don't have $100 forecast, and we actually, reflecting also what you said, we think there's a sort of extraordinary measure or issues at play now, so prices have gone a little bit too high, but we are not very good at forecasting this, so maybe we have to start to think more carefully about it. Now, the answer to your question is, in a round number, right, in America, there is not a big effect on growth but there's a redistribution issue, right? They're self-sufficient, so there's a big reallocation of resources. In Europe, it's a tax on the economy. For every 10% higher oil prices measured in euros, and the euro is quite weak, so it goes quite easily through, you take 0.1, 0.15 off GDP growth. And in the emerging markets, you say some of them are even more vulnerable. And indeed, if you look at the IMF forecast, you're seeing some of this, right? It's the EM that's been taken down a bit. So do you see $100 oil? Is it coming? I cannot give a number to you by law, but I see that if there are no major moves from the key producers, fourth quarter this year is a very, very challenging quarter.
But why have they not done the moves that you're talking about?
I think they already did some, but there is still some room to bring oil because we are focused on, the media is focused on Iran. It's a major issue, but another issue is Venezuela. There is a free fall of production, and very soon we may see Venezuelan production going below 1 MBD, 1 million barrels per day, which is really, really very challenging for the markets. And there are many fragile states here, what's happening in Libya, Nigeria, the production. And if there is one major natural catastrophe, as you were just alluding a few minutes ago, if it comes on top of that, it is a real, the perfect storm.
But is it possible that actually Saudi Arabia and OPEC just keep on pumping because I mean, they see demand, right? And they're trying to catch up, but somehow they couldn't actually make up for all the production lost.
No, Saudi Arabia, other Vienna Agreement participants from OPEC countries, Russia and the others may well push the production up. But the important thing is, in my view, they have to understand, those countries, that today higher prices, they may make some handsome revenues, yes, and consumers are losing, yes, but tomorrow it may be a bad news for them. This is very important in terms of demand growth weakening, but also giving impetus to alternative technologies and alternative production from somewhere else.
How likely is it that there is going to be an IEA stockpile released to make up for lost production in Iran?
Now, we monitor the markets very closely on a daily, if not hourly basis. But where we stand now, it is not something that we are discussing at the IEA.
When will you do? I mean, is there a price you monitor?
No, we do it only when there's a physical supply disruption. We don't do it in order to have an impact on the prices.
So an Iran wouldn't be enough?
There was, for example, the Hurricane Katrina,
right.
Libyan civil war. In those cases, we release stocks. But for the time being, it is not on the table.